Good morning, everyone. My name is Nurani Saatira binti Muhammad Rantin, number matrix BB2411073, and today I will be presenting my analysis and findings on the financial performance of Sunway Berhad, which is a prominent Malaysian conglomerate. This analysis is part of our financial management course under the topic of financial statement and ratio analysis. So this is the table of contents. I'll be presenting the details on the company profile and then the methodology. I will be discussing the data sources and ratio calculation approach and trend analysis, which is my findings analysis on the financial ratios, industry comparison between Sunway Group and Gamuda Berhad, and risk and strength assessments, which is I'll be discussing Sunway Group financial strengths, weaknesses, and potential risks. And lastly, investment decision, whether I will do a recommendation whether the investor should or should not investing on the company. Sunway Group began its operation in 1986 and headquartered in Sunway City, Selangor. Its business spans real estate, healthcare, construction, retail, hospitality, and many more. It has expanded globally, which is operating in countries like Malaysia, UK, Singapore, China, Vietnam, and Australia. Okay, and this is the 2024 highlights, which is revenue rose 28.5% from 3.21 billion, which is in 2022, to 7.88 billion ringgit, which is in 2024. And each net profit increased 56% to 1.15 billion ringgit. The ROE increased by 4.06%, showing improved profitability, and it also shows growth in total assets, liabilities, and equities. Next, I'll be talking about my data sources, which is how I got my data for the analysis. And I use financial statements from Sunway Berhad's official website and Bursa Malaysia for the years 2024 to 2024. I examine 5 key categories of financial ratios, which is profitability, liquidity, solvency, efficiency, market performance. And basically, these ratios help me to understand how well the company is managing its finances, assets, debts, and returns to investors. Okay, so for the trend analysis, we'll begin with profitability ratios. And as you can see, that return on assets from 2024 to 2023, the ROA remained at 0.03%, and on 2034 it increased to 0.04%. This shows Sunway slightly become more efficient in using assets to generate its profits. And next, we'll be talking about return on equity. It also improved in 2024, reflecting better returns to shareholders. And for net profit margin, as you can see that it remained stable at first, then improved in 2024, meaning the company kept more profit from sales. And for gross profit margin, we can see that it rose slightly and then dropped, indicating rising cost of goods sold in 2024. And for the overall analysis on the profitability ratios, you can see that it's improving, but rising costs impact margins. And then next is looking at liquidity, which tells us about the company's ability to pay short-term obligations. For the current ratio, we can see that it increased steadily, meaning Sunway has more current assets than liabilities. And then for quick ratio, which excludes inventory, was stable at 0.81% at first, from 2024 to 2023, and then rose to 1.07 in 2034. This is actually a good sign because it shows Sunway has more liquid assets ready to pay off its debts. And for the overall conclusion on the liquidity, we can see that it is improving, which is showing strong short-term financial health. Next is we'll be talking about solvency. As you can see that from 2024 to 2023, we can see that debt to equity ratio slightly decreased and then rose to 0.98%. This suggests that company is relying a bit more on debt. And for the interest coverage ratio, we can see that it dropped sharply in 2023, which was a warning sign, but it recovered in 2024 to 0.10%. This shows that Sunway improved its ability to meet in interest payments. So for the overall conclusion, you can see that solvency shows recovery, but rising debts remains a concern. Lastly, for efficiency ratio, for asset turnover, it stayed constant, which is showing constant use of assets to generate sales. So you can see that it's for 2022 to 2024, we can see that it's remains stable of 12%. And then next is inventory turnover, which is it dropped in 2023 but surged to 2.81 in 2024, indicating improved sales and inventory management. For receivables turnover, however, declined each year. This means that the company is taking longer to collect payments from customers. Efficiency is improving, especially in inventory management. Next is market ratio. It is increased steadily, reflecting improved profitability for shareholders. You can see that it is steadily rising from 2022 to 2024. Okay, for the industry comparison, I will be discussing financial analysis on Gamuda Berhad and Sunway Group on 2024. For profitability ratios, Gamuda outperformed with higher ROA, ROE, and margins. And second is liquidity ratios. You can see that both show good liquidity, but Gamuda holds a stronger position. For solvency, you can see that Gamuda has better debt handling and financial stability. Next, for efficiency ratio, Sunway is more efficient in asset use and inventory turnover. And for market ratio, you can see that Gamuda leads in EPS, indicating higher returns for shareholders. For risk and strength assessments, Sunway Berhad has several strengths, which is its EPS growth, which is from 0.13 to 0.19%. And then inventory turnover improves significantly, which shows a high inventory turnover, and then interest coverage bounced back in 2024. However, some risks exist, which is declining receivables turnover, which may affect cash flow, and rising debt to equity ratio, indicating more reliance on borrowed funds. Next, for investment decision, I recommended that for the investor to hold its investment. This is in order to monitor improvements in debt and collections before investing. This is because, as you can see, that it has even though it has Sunway Group has its pros, it also has its cons. Which is the pros? It has strong operational efficiency, stable EPS growth, and recovering interest coverage based on the trend analysis that I just showed. But it also has its cons, which is the rising debt levels and declining receivables turnover. That's all from me. Thank you for listening. I hope this presentation has given you a clear picture of Sunway Berhad's financial standing. Thank you so much.